Welcome to a new video on CryptoCant. Today, my dear friends, we have the complete tutorial for market cipher A and B. We're going to start with the B market cipher. You'll see just how powerful the market cipher B is, even using it alone to make trades. It's incredible. You won't believe it when you hear about it, when I show it to you. I'll show you exactly which settings I use for market cipher B, what I turn on and off, how it should look, and how to interpret it so you can make really damn good trades. You'll be amazed when I show you how spot on it actually is for entries and exits. After that, we'll take a look at market cipher A. That means the video will be a bit longer, but it's necessary so that you have a complete understanding, because after you've watched the video, you'll go into market cipher trades with so much more knowledge, you'll hardly believe it. And I'll show you market cipher A. What does it mean? How should you approach it? And what should you pay attention to when combining market cipher A and B, using them to open and close trades, and so on. Stay tuned, watch closely, maybe take some notes or just watch the video again. Alright everyone, let's start going through market cipher together now. We'll start with market cipher B. And you'll see that market cipher B alone is a really powerful tool if you truly understand how to trade with it. First, we'll go through a few settings so that it's easier for you to recognize what we're looking at, what we want to see, and so on. And then we'll go through each element one by one. What does each thing mean in detail? So all the oscillators and these symbols, these green waves, these blue waves, and so on. You see that you can achieve incredible performance just by trading with market cipher B alone. And later we'll also take a look at market cipher A together, and you'll see how nicely you can combine the two. But let's get started now. Very important, well, it's not absolutely necessary, but with market cipher we definitely don't use the regular candles. You could use them too. It works perfectly fine as well, but to trade and get better signals, we use these Heiken Ashi candles here. You'll find them at the top. Heiken Ashi, just click and you're done. You'll see in a moment why that is. Next, once we have the market cipher B from Woman True. By the way, I have another video which I'll display or link where I show you how to get this market cipher as well. For everyone who doesn't know how to get it for free, I've also included the link in the video description. And in any case, let's go to the settings. We'll start as usual with the inputs because we're going to add something in and take something else out. What we definitely need in the inputs is show RSI. That's very important, we need it. You can already see this line in the background. I'll explain it to you in detail in just a moment. You could also add the RSI regular divergence and so on, but for now we'll leave that out. Next, we'll go to the style. The first thing we do in the style section, let's see where it is. We actually remove the VWAP first because the VWAP is this yellow line. It would be a bit confusing for us at the beginning if I want to show you the money flow. I just need to quickly check where the VWAP was. It was yellow. Exactly, here is the VWAP and we remove it. What we add next is the RSI money flow area. That's this part here. What we do here is simply increase the color a bit and make it thicker. We do the same for the red part. We increase that as well, make it a bit thicker, and that's this line down here. You'll see in a moment what this is about, what we need here, and what we also need to remove is this here, the stochastic RSI. Please remove that as well in the inputs. That's the one. That's this big line here in the background, and then we're all set up. Now we can start trading. Now I can tell you a bit about it, and then we'll take a look at how brilliantly trades work here when you understand the market cipher B. Let's just start. I'll make this a bit bigger as well. Here we have these blue waves. This is the momentum oscillator. Momentum oscillator basically just means how strong are we and how weak are we right now. Here, for example, we have a very oversold level, and here is actually a very overbought level. We have this line here. I'm not sure if you can see it clearly. If not, you can also adjust this in the settings under style. And somewhere there you'll find these lines, the overbought and oversold lines. That should be this one here. Let's take a look at it when I move it to the side. That means the overbought level, if we increase it, you'll see this line up here definitely becomes a bit bolder. It's important to be aware of that as well. And let's also make the oversold level thicker and a bit bolder because these two lines are also very significant. Now we've actually set it up perfectly again. So whenever this momentum oscillator is above this white 60 line, 60 at the bottom, 60 at the top, we definitely have an overbought or oversold level. If a signal appears there in the form of a red dot or a green dot, that's already a very strong indication that we could enter a good trade. Not always, but there are a few other factors that come into play. But if we also have a few additional things on top of that, number one, we have this line here, this purple, red, green line. That's the RSI. And in this case, please don't confuse it with the idea that the RSI has to go all the way down or all the way up. No, that's not the case here. Here it's been represented in a somewhat simplified way. If we're in a purple level, that means we're at a nice average. That is somewhere in the middle. If the RSI is green, that means we're in an oversold level, which is also indicated by the oscillator here. But if we're in red, we're in an overbought level. That means this is a great spot to trade, for example, if you want to go short or something similar, because we're in an overbought level. Down here, you also have the sections for overbought and oversold levels indicated by this line, but those are the first things we have for now. This red part here and the green one, this wave in the middle, that's the money flow index. It's also important to know about this one. You should be familiar with it because it means that when everything is red, money is flowing out of the market, and here money is flowing into the market. And now, just as a basic understanding, please, this is very, very important. When we are in the middle area, those are not entry points for us. In the middle, it's too late because we say, okay, from now on, money is coming in, and now that it's green, we should be entering trades. No, that's wrong. With Market Cipher B, whenever everything is redor here, the RSI is green because it's at an oversold level, the oversold area. We have money flowing out of the market, and we have the oscillator, which is very, very low, and maybe right now the momentum is still strong here, but it's getting weaker and weaker. For us, this is a sign that the money that was flushed out of the market is now coming back in, as indicated by the momentum oscillator, which you can see is getting weaker and starting to rise again. That means for us, this is now really, really, really awesome. I'll bring something else in so we can look at this together more clearly. A zone like we have here, for example. Here we have a red RSI, or rather a red money flow index, a green RSI, and in this case, weakening momentum. That means here there would already be the opportunity to enter a long position. And this is important to know. We enter long positions when we are down here in the red zone. We enter short positions when we are up here in the green zone. And now, and you'll be amazed when I show you how well this works, because these other lines here, those are divergences. Divergences are very, very important if you pay attention to them, because for those who don't know how a divergence forms, it simply means, for example, in this case, we have a falling price, as you can see up here. Let me zoom in here again. We have a falling price here, but down here, and I'll zoom in on that as well, we have a rising oscillator. You can see this with an RSI as well. And if you look at it, the RSI here is rising even though the market is falling. That is what we call a divergence. A falling market in this case is a bullish divergence with a rising RSI and a rising momentum oscillator. That means this is a perfect entry point. And just how perfect this entry can look, I want to show you now, because if I zoom in even further so you can really see it clearly, it's simple. Here we have the first divergence. It wasn't quite perfect yet, but that wasn't a big deal. It gave us a second divergence as confirmation. The money flow index is red, but the momentum is decreasing. The RSI is starting to rise. That means this is the perfect entry point. And take a look at the top, exactly where the entry point was. I'll zoom in again. That means the entry point was right at this candle. So right at this candle, that's wonderfully identified. And from then on, it basically just went straight up. And as you can see, it went up beautifully. Very, very nice. Even here, this is now a Bitcoin 1 hour chart and somewhere. So in this case, you normally don't exit as long as we're not above this 60 white line. Instead, you take advantage of it until we have an overbought RSI. And if possible, the momentum oscillator has reached the 60 level. That would have been beautiful in this case. And this trade from here would have gone exactly up to here. We did rise slightly again, but then it started to go down a bit. Here we would have had a bullish divergence. Let's keep looking, because up here there's a bearish divergence. Let's see if that one would have played out. Don't always trust that all of them are very, very strong, but you can also take some very short, brilliant trades here. Here we now have this line from a weakening momentum on the oscillator. We have an RSI that is oversold, and the overbought momentum oscillator is above the 60 line. We've gotten the red dot here twice, and the money flow index is actually rising here. But that means right here we have a bearish divergence. If we look at this again in detail, where was the entry point? If I go here, here was this bearish divergence that was indicated. Don't worry, you can set alerts for everything everywhere. And that means here would be the entry for a short because everything is in perfect condition. And what happened here now is that we entered right at this point and then continued to move down. At the very least, we could have gone up to here, but as I said, this wasn't yet the oscillator down here where you would exit. That means the market would have gone up a bit more, as you can see here, up to this point. And after that, you can see here where was the next RSI or momentum oscillator, again in the lower 60s range. That would have been here. So in fact, the trade would have gone from here to actually here, and you would have exited here. That would have been another great percentage gain, in this case about 1.73%, depending on the leverage, up to 17.3% with 10x, for example. And that's how you would apply it. A divergence is not indicated everywhere. I want to mention that as well. If I zoom out a bit so you don't have a divergence everywhere, but let me see if I can find a divergence for you that wasn't marked but still played out. Is this a small one here? Okay, that's a small one. But as a little example, you can see here that we actually have a small bullish divergence. That means the price should rise here. But since the oversold level wasn't that low, in other words, we weren't below the 60 line, it means that there will probably be less of an increase. And that's exactly what happened, because if I take this line here where this divergence starts, you could have taken a short bullish trade here, but it would have already told us here, hey, a red sell signal, that's not right. So it wasn't entirely clean because it wasn't really at the high, and it also wasn't really above the oversold and overbought levels, meaning the overbought and oversold levels. And that's actually how it's sometimes traded in this case. I mean, right now it's showing very, very good divergence everywhere. I'm just looking, I think here it's not showing any. It's also not a clean divergence. Why isn't it a clean divergence? You could have played it out, in this case from here to here, number 1, because the momentum is getting stronger again here, that's number 12, number 1, and because the price isn't rising. As I told you, sorry, not falling, because normally the price should be dropping very sharply. And in this case, when the divergence started here, the price was more consolidating. That means it wasn't a real divergence. If you had played it, you still could have made a good trade here. But I would play it safe here. That would have been from here to here. If you compare it down below, that's how it should have been played out. Take a look at this live, really try it yourself, go into every time frame and so on. Check it out and just see how well it works with divergences, with overbought and oversold levels, and how good some of the trades are in there. And these are the kinds of things you have to pay attention to with Market Cipher B. There's so much information we get here from Market Cipher B that we almost don't need anything else. But we'll also take a close look at Market Cipher A. So now I'm here with Market Cipher A. I've already told you in the previous video where you can find all the symbols that are also significant in Market Cipher A. And now I'll show you how you can trade with it, what you need to watch out for, when you should exit at the latest, and so on. Market Cipher A, we go to Market Cipher. Trade, just so you have the website again. This is what it looks like. You have the option. If you click up here on the top right to select Market Cipher A, and then you'll see these different things that show what each symbol means. Bullish continuation, bearish continuation, short, long, manipulation, and reversal of the previous trend. If we now take a look at this together, live on the chart, you can see an incredible number of different things here. What you also have here, the momentum EMAs, which are really, really great for knowing when to exit, whether a short or long is valid or not, when you should get back in, and so on. But as a small example, if we look at it like this, let's start here with the blood diamond. Blood diamond that wasn't there before. That means you have this big square with the shining little diamonds at the bottom. When that appears, it's usually a very, very bearish signal. And it also goes beautifully downward, but in this case it shows us down here, so it would have only been a short trade. Why would that have been the case here? Because we can see down below on Market Cipher B, we are at the oversold level and it's starting to cross here. So light blue is crossing into dark blue. That means bullish momentum would already be returning here because we're at the oversold level and usually it doesn't go much further down from there. This signal wouldn't have been entirely valid. A short trade, get out quickly. If you don't take the P now, when would have been the latest possible exit? It would have come again here, at the latest when the chart or these EMA lines you see here cross over each other, then it's over. But as you can also see, and as we just said before, we have this blue triangle, and that's the reversal alert or the reversal signal for the previous trend. That means we were actually in a short trend. You can also see here, we're in a reversal alert, a short trend, meaning a falling market, and it says here, hey, from now on, the market is giving a reversal from the previous trend, and now we should turn bullish. And if you look at it closely, that's been recognized very, very well. So first the reversal alert, and then the green dot appeared here, which is a bullish sign. That means you would have only entered here and gone in at this point. But if we had paid attention earlier, where we said we have this divergence down here, you could have entered here or at the latest here because the divergence could have been extended further up to this point. So you could have entered even earlier, since our signal would have been here. Everything fit perfectly down here. That means we actually have a neutral, in this case a neutral RSI. We have a money flow that is red. We have weakening momentum. So in this case, this bloody diamond would definitely not be correct, and we would enter this long position here. You can see this long goes up beautifully, and here you might have even exited too early, which is why the combination is so good. Here with the momentum oscillator, we're at an oversold level, but the chart keeps rising. So what are you waiting for here now? In this case, as long as the chart continues to ride this wave here and gives us the golden circles, one after another, you can see there are a lot of golden ones here. Gold wares called bullish continuation. That means the market is still rising. If a bearish one appears in between, that doesn't mean anything yet. But as long as we keep riding it like this, that's fine until, and then it gets dangerous. At that point, you definitely have to take action. If Harry let me quickly remove the chart so you can see it better, if this line starts to cross downward, the first line begins to cross downward, that's the very latest point at which you should exit. You can already see short signals here, right? A red X is a short signal. And when that appears, it already means, hey, we're crossing downward here. Now it's time to exit. In this case, it would be in combination we received the reversal alert and all the confirmations. If we had combined that because we entered at the bottom based on the market's IFRB and didn't exit right at the first oversold point but stayed in. Let me go back in here again. We would have had a wonderful trade that would have accompanied us all the way up to here. Roughly here, let's say at the second alert, that would have been 5.28%. But as you can see down here, the market Cipher B would have had us exit much earlier at the latest here at this indication, which isn't bad. You could have also entered a short here because of this bearish divergence, since we have an overbought level, and in the money flow index we also have an overbought level and the money flow index is green. That means we have time again to drop down. So this point here, that's a big circle, would have been a good exit point to enter short, but after that we did consolidate and continued. What else is there here? That's also very, very interesting to know. There is market manipulation. So here you can see when this comes in, this yellow X, it means that there is massive manipulation happening somewhere in the market, either by whales or by something else. You can't say exactly what it is. But the thing is, when that appears, it means, and that's also how I heard it in the videos from CryptoFace when I looked all this up, that means actually in 70 to 80% of cases, it's a bearish market manipulation. In other words, things will continue in a bearish direction. And what he also says is, after 4 or 5 of these X's, you should be careful and wait for the next bullish signal, because that's usually when things start to go up again. At least for a short time, and here, 1, 2, 3, 4, Fivno immediately. Because down here, or even here, there is still no bullish signal. But here, if you look at it with the market participants being stubborn, down here we have this next bullish circle, even though we didn't have any divergence or anything like that. But that's what I'm saying. After several rounds of market manipulation like this, things usually start to go up again. You can see that it did happen, maybe not as much, but still. And you could have taken advantage of that because we also had a slight crossover with these EMA lines. And even though this crossover then reversed, we could have taken a nice trade here, which would have been up to this short signal about 8.14%. I mean, that's really quite something. 8.14% at 10 times leverage is 81%. It was a bit premature here to think that this trade was too small, yeah? But, and you can see it here as well, as long as these lines, it's clear here, two are so close together, you should be a bit cautious because that's consolidation. That's shown to us very, very clearly. You can also see very clearly on the market Cipher B that with the oscillators, with the momentum oscillator, we never cross above this white line up here or below it. That means we're consolidating here, and that's not really cool, right? That's actually not what we want. If the lines start to spread again and the oscillator moves further down, we know, hey, now we have the opportunity to enter a trade again. In this case, it would have been down here, and you could have, for example, taken a small bullish trade, right? But this way, you can also sort of filter out the consolidations a bit. I'll rewind a bit now, and you can take a look at it here. You see here, there's really no need to trade much until these lines start to widen again, and we get a confirmed signal. And then we know, hey, now we can go short and take advantage of that. So you can actually see here, it's super, super simple. As I said, this combination is really a wonderful indicator that you can use to trade very, very, very successfully. I've already tested this on several time frames, looked at it, back-tested it, and now I see how everything works. And it really is the case that this works extremely well. No nonsense, guys. The indicator is extremely good, but it's really only suitable for manual trading. You can set alerts, that works quite well, but then you have to go to the chart and check if it matches the overall chart view. How long do you stay in? When do you exit? And so on and so forth. That's the other thing here, but you can really make a lot of cash, right? Provided you have experience as a trader. I hope you enjoyed the video and that you now know how A, B or the combination works and what you need to pay attention to. Otherwise, I'd appreciate it if you leave a like, subscribe to the channel and so on. Thank you very much for watching. Bye bye.